Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Monday the 6th of the 9th, 2021. Time is 04:15, 4:15 in the morning, GMT. Asian session coming to close, European session firing up, our lunchtime, North American session. Right, Friday the 3rd, then the last full trading day. We had a negative opposed driver in the dollar at -68. Front and back door flows mainly going into the yen at +56, into the pound at +46, and the euro was the negative rock at -34. Activity ±102. Last week, to remind ourselves, then we had a negative opposed driver in the dollar again at -214. Front and back door flows mainly going into the pound at +191, into the euro at +159, and the yen was the negative rock at -136. Activity ±350. So last week then we had a weak dollar driving the market in an unopposed fashion. The bulk of the positive flows were going into the pound and the euro, and the yen was relatively weak, getting backdoor negative flows, arguably from the rising equity market transmission. And then Friday we had a reinforcement of the dollar weakness, but the euro actually deteriorated because it moved from the positive mover to the negative rock. The pound stayed strong and the yen came up as well. So we had yen strength appearing and euro deterioration on Friday. In the weekly flows. Intraday then, this is the Asian session to about 15 minutes ago. We've got a negative opposed driver in the yen at -22. Front and back door flows mainly going into the dollar at +20, into the pound at +3, and the euro was the negative rock at -1. Activity ±23. Well, we'll stop it there and right. Right, welcome back. We've written up the flows. So the euro is strong except against the dollar and the pound and the CAD. The yen is weak except against the AUD and the NZD. The pound is strong except against the dollar. The Swiss is weak except against the yen, the AUD and the NZD. The CAD is strong except against the dollar and the pound. The AUD is weak across the board. The NZD is weak except against the AUD. And the dollar is strong across the board. So what have we got? We've got dollar strength in the Asian session, and we've got AUD weakness across the board, and take your pick in the middle. So what's going to knock it about today and this week basically? Well, today we've got US and Canadian Labour Days, so we've got market holidays which will be significant, and Germany we've got tier 2 factory orders, and that's relatively early on. So once those tier 2 events in Germany are over, we've basically got a light or non-existent day today, and we've got a Canadian and US market holiday. So we're quite confident there's going to be some sort of move today without the restrictions and impediments of data risk, etc. So and a lower liquidity level. So somebody's going to be shoving the market around, and we're going to try and latch on to that. So Tuesday, tomorrow then, the 7th, we've got Royal Reserve Bank of Australia rates decision and Euro GDP. Wednesday we've got JPY GDP and CAD Bank of Canada rates decision, and Thursday we've got China CPI inflation data and the ECB EUR rates decision. So we've got 3 rates decisions banging through, and if you look at we've got the AUD rates decision Tuesday, etc. So that's something to bear in mind. Well, we'll stop it there and write up the asset classes. Right, we're back. We've written up the asset classes. So US dollar index then, so it had double top, it broke, it came back. It's now 0.40 from the high, so it's 40% off the modelled high. So soft, but coming back a little bit this morning. Gold mirror image effectively, double top, broke down, It's come back. It's 0.36 from the high, so fairly similar there. Oil, big pump up, soft, right down to the floor again. And it's come back and it's now coming off slightly. It's 0.47 from the floor, so it's below half marks. Wall Street, numerous new highs. It's come off 0.125 from the high, so it's an eighth lower than the modelled high. S&P and tech are basically at or near their model highs after breaking continuously higher. So that's where we are. US 10-year, this is the price of the bond. So we've got this 0.45 from the high. So it's the price has come down. Yields have stiffened up a bit in the US, and they're now starting to think about prices coming back. Yields are coming off a little bit. Bund then 0.4 from the high. Similar story. So that the yields between the EUR and the US 10-year, the Bund, are starting to sort of come together, and we've got the ECB rates decision later this week. Something to bear in mind as well. Right, copper chopped, big break, right thump down, and it's now 0.45 from the high, so it's above half marks, but it's been a fairly unpleasant ride. So US steel, basically soft, it broke, it's come back, it's 0.43 from the high, so it's above half marks, it's 43% from the modelled high. Right, so let's just remind ourselves what's going on before we do the final analysis then. So we've got this US and Canadian market holiday today, which will give us lower liquidity. We've also got very little data. Once we get this German German factory orders out of the way. So the bigger players know that once this there's very little to knock it about. They get much bigger bang for their bucks in terms of pushing the market around. So let's have a look what we think might be happening. So it looks like in the flows. Just grab this. It looks like we're getting a setup for selling the euro dollar, but we don't know fully yet. If you look at the Asian session flows, you've got a strong dollar. But the yen's driving the market negatively, marginally. But you've got flows into the dollar, and the euro is the negative rock. Now, and previously, last week, we had a very weak dollar, and the euro was getting secondary positive flows, and the week before. So Monday the 23rd to Friday the 27th, you've got a weak yen, and the pound was positively driving, and the euro was relatively strong there at plus 202, and the dollar was weak. Now it looks like we're setting up for a euro dollar push, because the euro dollar has basically been is charging up here. And it looks like we could see sort of a light data market holiday push, and that's looking most likely. So it's something to bear in mind. If it's not the euro dollar, it will be something else which will become apparent. It's bearing in mind you've got the ECB rates decision. I think that's Thursday. Let's have a look just to make sure. Yes, Thursday, and you've got the CAD's rates decision on Wednesday, and the Royal Bank of Australia rates decision on Tuesday. So that's something to bear in mind. But it looks like they're going to have a go at shorting the euro dollar. And if you look at the daily chart, the euro dollar is basically bang up against some numerous resistance points. So it's likely that that's a very favourable place to take it down from, but we shall see. And if we start to get a sustained move downwards in the euro dollar, then obviously we'll be jumping on board and trying to make some quick gains. So hope that was useful. See you tomorrow for the daily briefing. Thank you for watching.